Hey folks, welcome to Best Stock Charts for the new trading week. We had a crazy week last week in the equity markets, a big jobs data on Friday, and it sent the bulls stampeding through the bears. So what does that mean for next week? It means in all probability we are moving up higher. What we're going to talk about today, though, are the names that we like to the bull side. And I went over this on Thursday night, Stock Charts Live. It's posted on YouTube. You can go check it out. I'll link to it at the end of this video. I mentioned that I was looking at the software sector for a few reasons, and I'm going to go into those reasons in a moment. I did a scan for some large cap names, and I came up with some really good names using a Bollinger Band squeeze provided to us by TrendSpider. So really quick, with regard to TrendSpider, if you're serious about technical analysis, TrendSpider is a game changer. It's an advanced charting platform that offers automated technical analysis. What does that mean? It saves you time by automating complex processes, automated trend line detection, identifies key trend lines effortlessly, backtesting strategies, test your strategies to see how they would perform historically. Think about if you went into a trade and you knew through data, not by guesstimates, but by data, how this trade would probably have worked out in the past. That is valuable because what you need to be a successful trader is an edge. Always an edge. When you go into any trade, what edge do I have? And TrendSpider can provide you that edge. What else do they have? Seasonality. How would you like to know how does your stock, your sector generally perform in the window, month or week, that time frame in which you're looking to put that trade on? And today we're going to be talking about that quite a bit because one of the reasons why I like the software sector so much is because of seasonality. So stick around. We're going to go over my top 5 names. We'll go over them in a moment. The last one that I just pulled out of my hat was pattern recognition. And there's so much more. I can't go over it in one video. You'll get bored to death. Pattern recognition detects patterns automatically to aid in your trading decisions. How is that? So when I think about how long I've been doing this, or if you're an experienced guy like me, sometimes you say, I don't need that stuff. That's not true. I use the automated functionality all the time because even though that I'm an experienced trader, I make mistakes. I can miss stuff. And having the AI, the algorithm of TrendSpider there to support you is worth, it's priceless. So while TrendSpider no longer offers a 7-day free trial offer, I have really good news. And that good news is that I provide TrendSpider for free to silver and gold level members. And guess what? I give a 14-day free trial offer. So link below if you want to join up on YouTube, link above if you watch us on Twitter or on Facebook. I think it's linked below or in my profile. It's in my profile on Facebook. So don't miss out on this powerful tool and enhance your trading decisions and get the edge over your competition, which is, of course, your fellow traders. Let's get to it. So a really quick overview about last week's price action in the equity markets. Of course, we had the rally on Friday. And what happened on Friday is that we broke out. This is the S&P 500, broke out. So we had a short position on. We made that short smaller on Friday, and we increased our long exposure going into the new trading week because we put a hedge on the week before last, and now we're more balanced, more neutral, and maybe taking more of that short position off this coming week. And what we're short of are the triple Qs that they too broke out last week. So strong support immediately below, and we broke out. So if we do a retest and pull back, then I'm going to have to exit stage right on the short side, and then we're going to have to add to the long side. Simple as that. We're not emotionally involved, and we'll send out trade alerts to our members. Now, how did we do last week? Why are you listening to me? So we did take some of our short exposure off the table. However, the hedge that we put on from the prior week to the long side helped us out. Also, we put on a short of Ross Stores in anticipation of the dock workers strike, which happened. We booked those profits, we made them real. BHP Billiton, it became overbought. We shorted here and booked our profits last week. So in and out to the short side, because net, I'm bullish on BHP Billiton, forward looking, longer term, not right now. I think it could pull back even further because it broke support. Ross Stores, why do we go into that trade? You had a Bollinger Band squeeze. Let's take these drawings off. You had a Bollinger Band squeeze, and what is that? That's when the Bollinger Bands in red trade inside the Keltner channels, and I expected that this would fail, and it did. It failed. So again, the play is that we would get a fear from the dock workers strike. It was going to adversely impact retailers ahead of Christmas. That trade worked out. We exited stage right, booked profits. The following day, what happened? The dock workers strike ended. So we're out. So we also traded soybeans, and we did that twice, as well as natural gas. So a good week to the long side and to the short side last week. So net, a positive week, and we're looking forward to a new trading week. So what are we going to talk about now? Let's bring up IGV. What's IGV? IGV is the iShares tech software sector. Now, why this matters is that this is a blue chip fund. It's the largest software fund out there. But you need to know that this is a cap-weighted ETF, not an equal-weighted ETF, but a cap-weighted. So only a few stocks can bring the entire ETF up higher. So just be forewarned. Still a good product. And as a matter of fact, there are no equal-weighted ETFs for just simply software that I know of. I did a search, couldn't find one. If you find one, link below or put a comment below, and please let me know, because I couldn't find one. Anyway, so we also broke out on IGV last week, along with the rest of the S&P 500 triple Qs and whatnot. What makes this so special? Simple. For a multiple of reasons. What you're looking at here, take note, I have the symbol SPY. And here I have IGV. So we're just going to do a comparison on a yearly time frame. Now, the IGV is up 10.8% on the year. Not horrible, but not great. Let's face it. The S&P 500, however, is up 21.69%. So clearly, the S&P 500 is killing it relative to the software sector. And what if we also found an edge using TrendSpider, as I mentioned earlier, as one of the benefits that could give us an edge over other traders who aren't looking at this sector yet, but that may be changing. Why do I think that? Glad you asked. The reason is that on the week last week, while the IGV is underperforming the S&P 500, IGV last week outperformed the S&P 500 by 3 times. So are we beginning to see money rotate into the software space? I think that answer is yes. Let's take a look. So here's IGV, and here's a monthly chart. What we did here in the month of September was we broke out. It's hard to see. Let me see if I can maximize this a little bit. Yeah, you can see here that we broke out on a monthly time frame. So that's really good stuff. Now, the reason why this is so important is that we had been in a range for quite a while. Let's use this as our range right about here. All right, so between $89 and $79 per share. And we have now, and this went on since here, November of 2023. And we've just traded sideways. So a long-term consolidation on the IGV, and now we have broken out. And not only have we broken out, we have pulled back so far on the month. And granted, there's only a few trading days in the month so far. A lot can happen between now and the end. However, we did a retest, and we are now at the highs of the month, and now on a weekly time frame, beginning to outperform the S&P 500. So what's the play here? The play is that I decided, you know what, let me do this. Let me take all the components out of IGV, and I'm going to run a scan on them in TrendSpider. And here's what it looks like. I ran a Bollinger Band squeeze on all the components of the IGV in TrendSpider, and I got all of these stocks, and we pulled them out, and I picked out my top 5. Now, what I did also, for the benefit of those that may not be interested in these stocks, what I did is in the forum, if you're not currently a member of our forum, it's free right now, so I'm not sure why you're not. So link below on YouTube, link above on Twitter. And I posted all of these symbols free on a Google Doc. Anybody can access it and download it, do your own analysis on these names, see what you like. There are a couple of small dollar names that are in there that may be interest of you, depending upon your account size. So when you log in, you'll probably land like here on the feed. Just head on over to the TrendSpider space. It'll be in both chat and in the TrendSpider home area. So I'll also be posting, I'm going to do a scan after this show. I'm going to do a scan of the Bollinger Band squeezes on the S&P 500. And I'm going to post that later on this evening. So check it out later on. All right, let's get to our 5 top stocks for the new trading week and why we like them. First up, Datadog. So this is a monthly chart. So far in the month, we have a breakout, and currently we are trading above the 8-period moving average. But the month isn't over yet. Let's stick with the weekly chart. Weekly chart, we broke out last week. I fully expect that we're going to retrace back down to the support level. So let me pause here. Immediately following this video, I'm going to be going over to the members area. I'm going to be entering entry points, stop loss points, and price targets. So if you're not currently a member, sign up, 14 days free, link below on YouTube, link above on Twitter. So Datadog, big breakout last week on volume. So I mentioned earlier that there was an edge that we had over other traders. Let's check that out. Now Datadog, using seasonality, for the month of October is generally not a good month, but the however here is that that is a stark contrast from the ETF and a number of the other stocks that we're going to discuss now. Generally, let's go to the IGV again for a moment. IGV is up 71% of the time in the month of October relative to the S&P 500, which is only up 63% of the time. And we'll take a look at the triple Qs. They're only up 62% of the time. Let's take a look at the semiconductor space. They're only up 60% of the time in October. So clearly, seasonality favors the IGV and a number of the other names that are in the 5 stock charts that we like going into the new trading week. Now let's go back to Datadog. Price matters, so you can't just solely rely upon seasonality to make your investment decisions. And what else I'm going to point out here is that this is only 5 years worth of data on Datadog. So it's a very, very young company. So if we're going to take October at face value as being one of the worst months out of the year, 3rd worst month out of the year, well, November is tied for the best month out of the year. So I think that we need to do in this case here, given the fact that we have only a thin amount of data, is not hang our hat so much on seasonality, but focus more so than what we would normally do on price. And what is price telling us? It wants to go up, as it did last week. And in fact, at current, up on a monthly time frame, weekly chart, up on a weekly time frame, looking really, really good. Now, another chart that I like, and I discussed this again on Thursday Night Stock Charts Live, was Cloudflare. And you could see that we are in a long-term consolidation, just as we are with the software sector in general. And the longer the consolidation, the greater the validation of any breakout. So to me, I think that this is a great opportunity to begin buying these shares because they're beginning to perform. And in the case of Cloudflare, it has yet to really perform. Yes, it had a great week last week, but it's been stuck. We have some overhead supply immediately above. Now we have retraced back down to this lower band of support, which is at current about $76.73, and we reversed off of it. So it appears as though we're getting ready to charge up to $87.47 per share. Let's see whether or not we get a breakout. So another one that we like very, very much going into the new trading week. And as a reminder, I'm going to post entry points, stop points, and price targets in the members areas. You need to be a paying member to the Contrarian Trader to get the price targets. Now, in terms of seasonality, in the month of October, it's up 67%, and that beats the S&P 500. It also beats the semiconductor sector. It also beats the QQQs. But to be fair, we want to point out it's only 5 years worth of data. Right? So we don't want to hang our hat on thin data, but it's worth pointing out. Now, CRM, they had a horrible earnings report last quarter. Now, this is, again, a weekly chart. Now, what we did last week is that we broke out. We recaptured support. We did so on okay volume. Will we chase this on Monday morning? Absolutely not. How is seasonality? Seasonality going back 20 years. Okay, I can't believe this company's been public for 20 years already. I remember when it went public. 20 years worth of data. October up 71% of the time. November up 55% of the time. So clearly, Salesforce.com, this is the best month out of the year to own this stock. So it's, again, we're not just hanging our hats on seasonality. We're looking at price. Price is everything. Price and volume is everything. So what we're looking for here is a pullback, retrace. And what I haven't mentioned on these charts, the reason why we're looking at them is that we have Bollinger Band squeeze forming here. Bollinger Bands in red, Keltner channels in green. So what that is energy is getting built up, and we should expect a breakout to the upside. In this case, the reason why is because we're trading above the longer term and shorter term moving averages. They're stacked positively. So we're expecting a breakout. Now let's take a quick peek at a daily chart here. You can't buy this stock on Monday morning. Folks, you do not want to go chasing stocks. You need to wait for the setup. The setup must come to you. And I will be sending out trade alerts to our members in the forum I just showed you. So if you're not currently in our forum, there's only going to be a limited amount of time. I'm going to be sharing those quotes moving forward, or those posts moving forward. They remain there from last week and the weeks prior. So go check them out. So CRM looking very, very strong. Now, looking at MSTR, what really has me saying wow to this chart is that MSTR is highly correlated to Bitcoin. And Bitcoin was down over $3,000 last week. So the fact that we closed up on the week is a tell. So we don't want to ignore that. So what we want to do here is identify a couple of things. One, we have a nice sound base that's developed. Two, we do have resistance immediately above. To be fair though, we have support immediately below. We broke out the week prior to last week. We did a retest of it. It looks as though the path of least resistance is going to be to the upside for MSTR. Now let's take a look at seasonality. Seasonality, October is the best month out of the year for MSTR to own these shares. So there's your edge over other traders. Now the last chart we're going to go over, and again, I already have a position here, is Microsoft. So in this case, I've already posted the trade. On all the other trades, I will be posting them if we execute. Now Microsoft is having a bad time of it. We're putting in lower highs and quite possibly threatening to break down to new lower lows. So why did I open up a trade here? It's pretty simple. Let's bring up the stochastics, which is one of my favorite oscillators. And all it really tells you is momentum, and it shows you bearish or bullish divergences. And this one here is pretty simple. We're looking for a quote-unquote oversold reading on Microsoft. We know that the sector is strong. I'm anticipating a pop here in the early part of the week. If it begins to fade, we're going to exit stage right. If we break down below weekly support, I'll go back to that in a moment, then we'll be out of the trade. Now, at current, you're seeing these Stokes. They're trading down below the 20 mark. They're beginning to flatten out. And you've seen in the past where they threaten to break down. These begin to hook up. Actually, this is led by price, so I shouldn't say it that way. We get a head fake breakdown or a bear trap, and of course, the shares just move up higher. That's the play here. Now, when I'm wrong is if we close down below this lower band of support here at, let's say, $414. We'll give ourselves a little bit of room. But if we close down below that support level on a weekly time frame, we need to get out of the trade because we are wrong. And we want to keep that loss very, very small. So that's it for today, folks. I really want to say thank you for, if you got this far, thank you very much. And again, don't forget that in the TrendSpider space on our forum, all these links are below, and it's free, no credit card required. You can go in and check out all of the symbols that I pulled up on the TrendSpider scan. And later on today, I'm going to run a scan, same scan, Bollinger Band squeeze on the S&P 500. That's going to be posted only in the TrendSpider space and the Bull and Bear Banter chat. That's our main chat room. And a bunch of great people in here. So it's free. Sign up, join the crowd, see you on the other side. Everybody enjoy the remainder of your weekend. Don't forget to join us 6 p.m. Eastern Standard Time on Sunday for Sunday Night Futures Live. So see you there. Talk to you soon. Be well.